welcome to our financial modeling workshop. Thank you so much for being here. We are just getting started, and as you know, generally people take a while to join. And while we're waiting, thank you, hi. While we're waiting for everyone to come in, let's get to know everyone a little bit. Thanks, Richard, for stopping to share so we can see everybody. So as you know, today we are going to talk about financial modeling, and what we understand by saying that is we'll be trying to understand how startups start with their financial model. That is like how they move from fuzzy, no data, qualitative information into moving that into more startup-like information, data that they can share with others and especially to investors to be understood. So we'll be talking about this today, and I'll shortly introduce you to our speaker. To move forward, I will quickly explain you what we do here and why are we here in general. So many of you have come to our previous events, so you have heard about Startup Investor Accelerator. This is a program currently based between Europe and the US. We are an angel investor training program, which also has a startup competition part. Our goal currently is to be helping startups to become investable through giving different resources and helping to elevate the type of conversations they are having and generally build further understanding and knowledge in the startup and investor ecosystem. John Seacrest here, my partner, many of you know, is the original founder of this program from more than 10 years ago, based in Seattle. And John has been running this for many years. John, could you please quickly introduce yourself?
Sure. I'm working on building out more ecosystems for startups, and I see that one of the big constraints in ecosystems is that there's not enough deal flow, and that deal flow typically comes because there's not enough people asking questions as angel investors. So we're trying to double and triple the number of angel investors in ecosystems. So to do that, we do many things, including the open coffees every week to try to connect people to resources, Lean Startup to convince you to look at your customers before you touch your product, and the Angel Conference. We also have a fund management program where we help, we have a peer learning program for fund managers that want to be more professional about their investing. So as we expand, we have helped angel conferences end up Oregon, Washington, BC, Alaska, California. So we've covered the West Coast, and now we're working on the West Coast of Europe as an effort to try to spread this pattern out to other places. I've been putting a lot of content into the chat. I think if you take a look at the chat and save it, I think that'll be useful for you. The Dave Parker book, I think, is particularly useful. I'm going to have to drop off. I have other conflicting duties, but I'm glad to see everyone here, and we're glad to continue the conversation at our open coffees or at our other events that we're doing. Thank you.
Thanks a lot, John. Thank you so much. And now let's address Richard Evanson. So Richard Evanson is today's our speaker, who is more than an expert in the startup environment. He has experience not only in early stage startups, but also much later and much more established companies. And he has been doing this professionally for many years. And he's also mentoring, advising startups to become more established and to grow in general. But Richard, could you please maybe help me introduce you a bit better, sharing a bit more about yourself?
That's actually fantastic. I also took part in the first Transatlantic Angel Conference. So if you're looking to be an angel investor and learn about that, I think that's a fantastic way to do it. There's an upcoming one. And we work with a fair amount of startups, some of which might be here and part of the TAC2 conference, maybe. So yeah, my background basically has been as a business consultant advisor. I've done a lot of in-depth financial models for large tech companies, IBM, HP, Dell, all of those guys, most of the telecoms as well. Fair amount of competitive analysis, customer analysis. I've been advising startups, everything from idea to early stage to about Series A, at which point I kind of let go of them for a number of years and guiding them on how to best present themselves. So some of the content I can provide is a little bit on that early stage before you actually have quantitative data to show how do you best showcase yourself. Equally, it sounds like we've got a mix of folks that are very, very mature here. So I'll try to talk a little bit about doing some more advanced quantitative stuff, but yeah, that's probably a little bit more involved for this discussion, but happy to take questions from anybody along the way.
Thanks a lot, Richard. I guess at this point, I will just leave the stage to you and have you get started. So folks will be spending the next, I guess, an hour together. So Richard will be sharing his knowledge and experience. You're welcome to ask questions. And towards the end, we'll have a Q&A and more networking. So Richard?
Great, thank you very much. Let me just close out a couple of screens here. Folks, please, as you have questions, just tone in. We're a relatively small group, so I think open Q&A is probably going to work best. And let me share this. Is everybody able to see the presentation okay? Yep, great. All right, I'm going to reduce this screen here, so you will need to go off mute and voice in if you want to ask a question. Otherwise, Astrid, if somebody asks something in chat, if you can just let me know.
Certainly will.
Great. All right. Let's see. So we've added some, if anybody needs to take any links here, please feel free. We're doing this a little bit on the fly. Astrid and I were trying to put this together over the last hour. So I will apologize in advance if my flow is not optimal here. I don't need to give too much background on my side. Basically, I've been a consultant, business consultant, strategy consultant. I've worked at Forrester, IDC, other consulting firms, presently working for a market research firm, as well as a competitive intelligence strategy consulting firm as an advisor, and working with a fair amount of startups as a mentor and advisor. All right, so one of the frameworks we need to use here as we're trying to figure out, how to best evaluate startups, how to showcase their value, which is really what this is about, is understanding where they're at. And different rules and approaches apply depending on the startup stage. So, I think most of us that have done a little bit of research or in the industry, if it's already a Series A, B startup, let alone an actual established company, we're quite comfortable with that. We know those KPIs. There are certain metrics that we expect. The companies themselves know about these metrics, so it's almost a very nice, easy dance, because we say, hey, we need to assess you. They provide all the metrics. They provide their P&L statement. They provide, their cap table. They provide their projections. We look that over. We run that through, our analyses. Anybody on the VC side probably also has some of their own proprietary algorithms or mechanisms to assess companies. So usually by that stage, you kind of know where a company is at, where it's likely to go. You're able to assess it well. Where it starts to get more difficult as you go earlier in that startup life cycle. Maybe they're just getting a little bit of revenue, and you're trying to figure out, okay, what's the potential here? They have a couple of customers, a little bit of revenue, their costs probably are above their revenue. Is this thing ever going to be profitable? Is it going to scale? Is it going to be a unicorn? Really, really tough. And so we can look at some of the ways to assess that. Then you start going pre-revenue, and suddenly you're in this really tough zone of, well, wait a minute, we don't have any hard customer KPIs? Where's your revenue? Where's your CAC? Where's your CLV? All of these other things are just not applicable because there are no customers yet. So there's a different set of metrics. It's more or less, what I call the engagement metrics that we start to look at to understand, okay, well, how much interest is there? How much stickiness is there? Is there a possibility that we can see that these guys might go more viral, that they might ultimately be able to do something here? And what is that business model? What's that monetization model? How those pieces fit together? So honestly, at this stage, we start going from, hard quant modeling to a little bit more of the, from the science to the art, and there's different ways we try to look at startups to assess whether they have what it takes to ultimately produce those numbers that, make them, those high ROI type of startups. And then you go even further down the line where they might have an idea, a concept. They're trying to, figure out a niche for themselves and trying to assess that. And that often really relies on doing far more external research because the startup itself may not have enough there. So at that stage, typically, all of those numbers are kind of out. They're not even guesses at that point. It's put a blindfold on, pin the tail on the donkey, kind of a situation. So you want to really assess, the individuals, the idea, the market, all of those basics that, to be honest, we want to look at with a startup in the first place. That said, there are some things, which you do want to look at and that you can quantify with a bit of research. And for the startups that are at this stage, there's some things that you need to start thinking about and building into your pitch deck such that you can position yourself and align yourself a little bit better for those investors that are trying to evaluate you and go, hey, are these guys worth, this pre-seed investment that they're looking for? Any quick questions on this? Otherwise, I'll keep moving forward. So this is actually, I asked Astrid to include this slide. And one of the things I like about this slide is it's basically how businesses work. It's very simple. Whether you're an online business, brick and mortar business, whether it's B2C, B2B, it all starts with, finding people, attracting people to you, getting visitors. Then you're trying to figure out how you can best convert them into actual customers, and get them engaged and put them in your pipeline and build your funnels and do all of that. And at the end of the day, well, for most businesses, you need to figure out how you get money out of them. How do you monetize these relationships? We've seen through like the dot-com period, there was a huge disconnect between customers and money where it's like, you know what, we're just going to have millions and millions of followers or people that are signed up, and, we'll figure out how to monetize them after the fact. In some cases, a lot of cases, that did not work. Nowadays, I think, given the market, if anything, we're all looking for relatively clear routes to monetization. In other words, there needs to be a clear way that, we can see that, yes, you can attract those customers and those customers are actually going to pay money. And this is how much they're going to pay. This is how big the company is ultimately going to be. This is how you're going to grow. This is how you're going to monetize these customers over the long term. This is how you're going to leverage the customers to get referrals or promotion or otherwise to build your business. So I think, for startups, when you're trying to really understand high level, how does this work? This is a good slide. And all of these things need to connect. They need to make sense. There needs to be logic, good assumptions. And ultimately, we'll start trying to put some actual metrics behind this such that you can measure and monitor and then optimize your business. If anybody has any questions, please let me know. So very early on, and this is kind of the, when you're a startup with an idea, you go to one of the Techstars weekends, and basically you're trying to firm up this idea. You go online, you reach out to a bunch of people to test out whether there's interest in this idea. These are some of the metrics that, you can actually use here, which is, how many people did you, how many surveys did you send out? How many people responded? What was the interest? What were some of the scores there? It's really good for startups that, get stuck in this, I will build it and they will come. I know, I'm the Henry Ford of our era. I know they don't want a faster horse. I know they want this thing called a car. It's really good for startups that are stuck in this bubble, to actually do some initial customer research and reach out to people and understand where they're at. And the reason being is, you need to ultimately convince others. You need to convince others to join your team, but also investors to come on board. And if all you have is your own, echo, your own opinions, that's going to be a bit difficult. So very early stage, do customer research. You can use surveys, you can use qualitative insights to kind of build out an understanding of whether there's enough interest in this. And Techstars actually does a nice job of this. Literally over a weekend, they have you test things out, throw it against the wall. Does it stick? If it doesn't stick, try a couple of differences until something sticks, and then you can move forward with it. With my startups, I tend to, put them through a quick fail method where I do something similar, where, they come to me and they say, hey, I've got this idea. I think this product's going to work. And I'm like, great, go talk to half a dozen potential customers. Let me know what they say. Usually with the first idea, after 3, they come back, they're distraught. They're like, yeah, nobody has any interest. They said you should do this. Okay, we'll make some changes. Now go talk to another 6 and do that again until you get enough people that say, yes, this is something that is of interest. Now, you've kind of vetted it qualitatively from a research standpoint, and then you start to go a bit broader. You can do surveys, however you want to do it, to figure out quantitatively whether there is enough interest or backing for this idea. So if I'm looking at something really early on, beyond just having a solid team and a really, interesting idea, I kind of want to see that there's been some research here. How much research have you done? How many potential customers have you talked to? How did they rate your idea? How much would they be willing to pay? You can ask them in a survey, effectively, for a solution like this, would you pay $5, $10, $25, $50, $100, whatever that range is, to assess that? Now, and I know, at the end of the day, that's kind of happy talk. I'm going to take all those numbers, and honestly, I'll probably take 25% of them to believe that there's something there. But still, early stage, there's something there that you can, as a startup, you can provide to potential investors to show that, yes, you do have an understanding of the market. Yes, you have tested this idea out. Yes, there is interest. Yes, these individuals have mentioned that they would be willing to pay, let's say an average of or a median amount of this amount for your solution. So even early on, there's some metrics that you can provide as a startup. Let me stop here real quick. Questions, thoughts, anything?
I want to ask about the, you've got some channels there that don't necessarily seem to be, you could put surveys out, but it's hard to understand how many customers you might reach through those surveys.
Yeah. So part of it is, again, it depends on what your solution is. If it's more on the B2B side, LinkedIn, otherwise, if you have email lists, you can do that. Or again, you can leverage a company like ours. We do professional surveys. So, if you're targeting basically, CIOs to figure out whether, your SaaS solution is something that they would buy into, yeah, we can do that. Depending on your budget, those are possibilities. If it's a B2C, going on Facebook or Instagram, those actually are pretty decent channels. Facebook, often I see a lot of folks testing things out there. You can go into a relevant Facebook group, for instance, and put stuff out and have, basically just give them a link to a survey, assuming the group allows it. Some don't. You can try it that way. So there are a number of different ways to actually different channels depending on what you're trying to do and different ways to actually test it out. Yeah. Did that answer the question? It was a good question.
Yes, thank you.
Yeah, sure.
Before you go on, I have
Yeah.
Ben, I have a quick question for you.
Sure.
As you're at an early stage, you have to understand what the desired outcome looks like. So the qualitative elements that you need to really evaluate, how do you transition those into a matrix?
Ben, you're somebody after my own heart. I actually spent about 10 years basically building out matrices for how to translate qualitative information into some type of quantitative matrix and assessment. So typically what I would do in that situation is you can create a grading legend, if you like, and basically you look at key parameters. So for instance, early on, typically what we'll look at is the team, the idea, the market, the business model, the monetization model, the ecosystem. There's several different dimensions we'll look at. Within each one of those dimensions, we'll basically say, okay, on a 1 to 5 scale, if it's a 1, what are we expecting? Or 0, let's say 0 to 5. 0 is there's no team at all. 1 is there's a founder. 2 is that there are several founders and they have some skills. 3 is that it's actually a solid team. They cover the bases. 4 is that they actually have experience across these areas. And 5 is that, wow, this is an experienced team that covers the bases and these individuals have high potential, for instance. So typically that would be the approach I would use for, trying to quantify effectively qualitative information. So you create kind of this grading and you figure out what those dimensions are and how important they are. Then within that, you may also need to weight which dimensions are more important. So for some, it's, team, market idea, at which point, that team score needs to be weighted much more than the idea, for instance. So that's one way that I've used in the past to kind of quantify effectively qualitative or subjective information. Does that make sense?
Yeah, I'm just trying to visualize. So there's someone from pharmaceutical and someone at startup. So let's say in the pharmaceuticals that you say, I need to understand the relationship between government regulation and the end users and say, okay, that these people have to trust. So you give it a value, a percentage, stick it into a matrix where the items that you did, that each one then goes into kind of you're building kind of a map to the end. Yeah, you're starting at the end of reverse engineering to the optimum points of origin.
Yep. Yeah.
And to do that, you said 1 to 5, but if you look at regulation and the different stakeholders in the development and marketing, then you actually develop kind of a trust relationship percentage. That between government and what I'm trying to do,
sure,
it's 25%.
Sure.
Between the people in the market and what I'm trying to do, it may be 70% that people are willing to accept. Then you do the same thing with different risk elements like market. Where do I want to roll it out? What kind of value do I want? What price do I actually want? So you're really, before you start building either a matrix with the set of numbers built into it that you can actually use to derive the
sure,
an effective structure for the organization.
Right. And so Ben, what I would say is it depends on what your outcomes are. So for me as an ex-analyst, I would often have to come up with unique metrics which I could then correlate to actual business outcomes to show that one of my previous employers had, a quantitative approach to measure companies that could predict, how well they were going to do. What that metric is, is going to vary depending on the situation. But you can come up. Let's just say it's you have a high correlation between your trust metric and actual sales within the pharmaceutical industry. You've tested this out. You've run your models a few times, and you find that the higher the outcomes, the higher the actual sales. You've been able to show that quantitatively. Within that trust metric, then you have 3 or 4 different dimensions that make up that trust metric, and those dimensions are weighted differently depending on how important they are. And within each one of those dimensions, you have a scale there whereby you are rating these companies on particular information. Typically what happens when you're doing these kind of models, and this is for the startups listening to this, please just ignore all this. This is really much more advanced than you'll ever have to do. Typically when you're doing this, you're going to have to go through a number of different iterations. So you're going to come up with these dimensions, with the scoring metrics. You're going to score these companies. You're going to look at financial information, historical, and okay, the approach you use, does it vet out? When you actually run the quantitative analyses, do you have, a high degree of correlation to the outcomes, the 95%, margin, that whole kind of stuff. And then you keep changing until you figure it out. Sometimes you do, sometimes you don't. I've had certain things that I just had to let go of because they were not able to actually prove out quantitatively. So that's almost like a science experiment, and it's very, very complex. If you're just looking for investment purposes, you can probably simplify that a little bit more and not have to get into all this complexity. And if you're a startup, you definitely don't need to go down that path at all. That's going to be just too complicated for most startups. Does that help at all? And again, from what you presented earlier, I'm like, okay, you're kind of at the extreme end of what you're trying to do with this stuff.
I appreciate that. That clarifies your starting point.
Yeah, thanks. The stuff you're trying to do is great, but I'm like, it's kind of on the opposite end of probably where most of what we're going to talk about is at. So, yeah. Anybody else on this kind of really early stage? And there are a couple of other early stages we'll talk about. So this is like really, you walked in this morning, you got an idea, you need to test it out and try to put some metrics to it, kind of stuff.
Anders raised the hand.
Yeah.
Mhm.
Sure.
So, hello, Richard. Thank you for your time here. I'm just wondering because my partner and I we actually enter in a startup accelerator, and
Okay.
we are in this very early stage of our startup.
Yep.
We are trying to see how actually from which angle we can engage with it.
Sure.
Because, for example, real estate is a very big business. Always has been since there's houses,
You have the tokenized real estate idea? Was that
Yeah,
one?
yeah.
Okay. Yeah, sure.
I mean, this is something that we are not the first doing it. There's a lot of people doing it.
They're trying to figure it out. Yeah.
Yeah. And there is a few actually that they're working.
Yeah.
Whether there was a crowdfunding real estate or tokenized crowdfunding real estate. This is two different things.
Sure.
The point here is that we know the metrics related to real estate.
Sure.
We know the metrics related to people who invest in, let's say, crypto environment.
Right.
So, and then from these metrics, how we can, put all that together and say, hey, we already did our research. And I mean, to be honest, we have this and we have that. And we are actually, we already, we launched a small survey, and we asked for the people if they were willing to invest in this kind of business. And yeah, more or less 70% of them say yes. And we put an amount, you know, for them to invest. The thing is, yeah, how do we do to clear these metrics, these inputs that we have in order to present to the investors?
Yeah.
Because we really want to have our first round of investment or seed investment. And yeah, we are figuring out how we put all this data together.
Sure.
You know.
Yep. Brilliant question. And I think, you know, the challenge in you guys are, you know, almost in that Henry Ford kind of situation where you're trying to bring something net new to the market. It's one thing when it exists already, you know, then most of the stuff you're talking about is what I call top down. So you can figure out a market sizing. You can figure out all of those metrics. Those are, you know, top down metrics that, you know, would be valid potentially for anybody in your space. The bottom up, and this is kind of where we're starting this, is the bottom up is, okay, you kind of go from what you have, your particular solution, you take that apart, and then you try to prove out, you know, what is the strength of your particular solution and how is it going to then connect with those KPIs? You know, so for instance, if, you know, one of the KPIs is that, you know, there's a high willingness to pay for real estate with cryptocurrency, you know, then you would need to start connecting the dots to that. Okay, well, how are we actually going to be able to get to the individuals that have cryptocurrency that are willing to invest in real estate? And past that, how do we take that and actually, you know, in a stable way, if it's not stable coin, be able to convert that back into fiat currency that most real estate investments are monetized in. So there's some of these get a little, yours is a little bit more complicated than some others in that you need to kind of build out this kind of step-by-step approach to understand, you know, how is this going to work? And that will help you understand, you know, who are the individuals and be able to test out each one of those kind of points in the process to figure out, you know, how is the business model going to work? That's honestly in your space right now, that's a lot. It's the business model, somewhat the monetization model, but it's a business model. How does this work? How do these pieces all come together in a way that makes for a solid, viable business? And I apologize, I haven't looked at your company, so there might be nuances here that I'm totally missing, but I've seen a couple of different pitches in this space. So it really is, you know, breaking out this whole thing step by step and looking at each step and figuring out, you know, what's happening here. How could you measure that? How could you test that? Trying to test that out. And then, you know, if you can show a logical flow that, yes, we start here, we go here, and then for investors, we go, yep, all those steps make absolute sense to us. You haven't, you know, there's no, and then the magic wand happens, which that is too often the case. And then within each one of those steps, you go, and this is how we are going to be able to show our progress. This is the KPI we're going to use, and this is how we tested it out. So that if you kind of do almost a matrix that way, where you take across the steps and this, you know, customer journey, customer life cycle, and then break it down that way, I think, you know, that it conceptually, it proves things out. And once you can get to that point, typically you can find ways to actually quantify it. But I'll be upfront. Yours is, we had in a previous round, we had a company doing something really similar, and I personally struggled to figure out that the numbers on that because it was so cutting edge. Real estate, absolutely. Cryptocurrency, absolutely. You know, the size even of real estate transactions in the metaverse, that's all fine. But, tokenizing, physical world assets, that one, that's a tough one. Did that help at all? Maybe provide a couple other pieces there, or?
Yeah, because actually in this part, yeah, we were thinking about to have this tokenized real estate. It will work kind of financial assets.
Yeah.
So the idea that we have is that we will own the real estate assets, and we will allow to the people to like in a company buy shares of those.
Yeah.
So I mean, this is more related to how we say democratize them, make the real estate,
sure,
and people can actually access to it. But yes, of course, we were thinking, of course, at the beginning, our business model, it's the all one buying real estate assets and renting.
Sure.
That's the old model, model. But in order to do that, we want to actually make it more accessible to people to invest in it, so we can buy more assets.
Sure.
So it will be a cycle of money going and spending in real estate, and that's
and again, if your approach here is basically kind of pulling together an existing market, which is real estate investment trusts, REITs, you can quantify that, you can see how that gets measured, but then the funding comes either through crypto or you're trying to tokenize it in different ways. Break all that out, break it down into the individual steps and go, okay, well, how am I going to get the person from this step to this step? All right, let's test this out and see if this is solid. So early on, honestly, it's a real thin line between just researching what you need to know to do your own business and actually quantifying things to prove it to others. I mean, honestly, you should be less worried about quantifying it for others and just figuring it out if this is going to work itself. There are some angel investors out there. You can take this idea there, they go, wow, that's an exciting idea. Great. There are others, especially VCs, that have a much more systematic approach, and they're going to go, yeah, there's too much wand waving here. The devil is in the details, and you're not showing us that you understand the details of this step by step and what's going to happen, where are you going to potentially lose customers, and what percentage are you expecting to lose there, for what reason, and all those assumptions. So if you really go step by step, put yourself in the customer's shoes and walk through and be pessimistic about it. This is the thing. The other thing I say is, don't come from your own bubble where, of course, everybody's going to love you and do all these things. No. Imagine you're having to drag people every step of the way. What is it going to take? And how are you going to get, how are you going to make them aware of you? How are you going to get them to engage with you? How are you going to get them to give you information? How are you going to get them to maybe sign up for something that is kind of like an early trial close to test whether there's interest? How are you going to get them to maybe put a credit card behind something, or give you access to their crypto account just so that you have access to money? All of these kind of things. Yeah, sorry, this is getting down. I'm going down a rabbit hole, I realize here a little bit. So I'm going to keep moving forward. Yeah, we can talk a little bit later, but this is kind of the way usually for these kind of things, I break it down across the customer journey, because it'll help you develop a strong strategy. And for the customer journey, if you do it right, you can identify what does it take to move the customer from step 1 to 2 to 3 to 4. You can find metrics to tie to that. You can then start to monitor and measure and then optimize those. All right. I'm going to move forward, just otherwise we'll never get anywhere here.
Right. So Nihal Shah has raised this, and Nihal, is this
Sure.
a question related to this part that we were speaking, or is
Yeah.
it?
So,
Let's make it
just
quick.
like, yeah, so just like Mr. Mendoza was saying that early stage, he just had an idea and they want to put a value on it. So
Yeah.
me being from the other side of the table, I work for a venture capitalist. So what you said, I just connected a lot with you that, okay, you have to be pessimistic. Like whenever we are having models as well, we put 3 scenarios, like if the market is bullish, bearish, or neutral, but the customer acquisition cost still remains the same, like that is of bullish. So you
Yep.
just market your product as if the market is bullish, then you get returns or not, that depends on the market, right? So,
Yep.
but you have to stay active. You have to get the CAC in. So the question that I had was like valuing these ideas that are on ideation stage or prototype stage, which have no revenue, or also the ideas or the startups which are in revenue stage, but they don't have any previous rounds of what do you say, of valuations or of fundraising. It becomes difficult for us, the VCs, to really value them, put a number on it.
Yep.
So that's a big challenge that we face. And like Mr. Mendoza has some brilliant ideas, but how far will they go? So that market, how volatile it is, those all things are really difficult for us to take into consideration by
Absolutely.
putting a number. Like valuation is just a number.
Yeah.
But there are a lot of things behind that number. So which all things are the most important things is my question.
So the most important things are for you is your GP and your LPs. Part of it, honestly, is you need to assess, what is your internal culture? What is the appetite for risk? How early do these folks want to get involved? Because the reality is, you're just not going to know. The earlier you go, the more you're flying blind. Yes, the entry point is lower from an investment standpoint, but the chance of any startup early stage in the idea stage doing something like this succeeding, let alone becoming a unicorn, I mean, the odds are astronomical against that. And so, depending on your VC firm, I would argue that it comes down to the culture. I know some smaller VCs that are targeting seed, pre-seed. They may only have 50 million assets under management, and their whole thing is finding these potential superstars and investing in them very early. That is part of what they're doing. If that's not your firm, and you're going to have a bunch of people say, hey, yeah, but where are the metrics? Where are the metrics? Don't even look at these guys because they don't have them. And you just, again, that's really more of a cultural question that you have to answer internally. Once you have a culture that understands and wants to invest in very early stage companies that don't have these metrics, then at that point, you're going to have to find a construct that you all agree on for assessing it. And that's the little bit of the discussion I had with Ben as well. It's all that qualitative information. And how are you going to rate, this founder? How are you going to rate the team? How are you going to rate the idea, the market, all of these other pieces there? And then, you will come up with your own internal scoring metric based on effectively subjective information, because there's very little objective, even qualitatively objective information early on. So yeah, for the VCs here that want to try to fit these early stage startups into the typical VC model, there's a reason VCs step in at Series A. And they're not stepping in early on. And some of it is by Series A, you've got all of those numbers that you can plug into your models. And so you can evaluate these companies according to whatever criteria you have. Does that help?
Yeah, thank you.
Yeah. Sorry. Again, sometimes the answer is there is no answer for it. And that's one of those ones. I'm not gonna try to take a square peg and put it into a round hole kind of thing.
Yeah, I agree.
Yeah.
It depends. The common phrase, it depends, comes everywhere.
Absolutely, absolutely. So as you start kind of moving forward, you start finding other metrics, and these are, we talk a lot about traction, with startups, and there are ways to show traction early on, and I work with early stage startups, so I try to help them, break this down basically into two columns. One is the efficiency and the other is the effectiveness. Efficiency is what have you accomplished over time? Most investors want to see a certain amount of momentum, so being able to show that you've, learned a lot and that you've built out your product and made several pivots over a short period of time, that's great to see. The other side is, the effectiveness of whatever money you've invested in there or others have invested. That's another nice metric that, we actually, got to a V2 with only $30,000, dollars of funding. That's a lot different than, we're hoping to get a V1. We've had 250,000 to date. We're not quite there. So these are, ways that early on you can show this. And some of it is you have to, kind of break this out and help investors understand just how difficult some of these pieces are and what it took to get from A to B to C. And then, that'll help them understand, okay, well, how much do you really need to get to D and E, et cetera, et cetera. So there's all these different types of metrics. What I try to advise early stage startups on is, first and foremost, is get away from a lot of the quantitative metrics. They're not going to fit you. You're going to struggle. If you put too much weight behind it, it can actually undermine your business from moving forward, because you start trying to run your business to metrics that may not be applicable for where you're at in your stage. So really try to just make, understand where your business needs to get, to make money, reverse engineer that, figure out those steps, be able to show how, get to each one of those steps as quickly as possible, and be able to show that and prove that to investors. Show along the way where you got stuck and what you did to get around it. A lot of early stage startup investing is about, the team. And it's not just, wow, this person looks good. No, it's, how resilient are they? How quick are they to be able to respond to things and deal with things and move around things? So there's a lot of different ways to kind of show early on that you have, value in what it takes to ultimately, be that unicorn, even before you have revenue. These are some other metrics that once you actually start having some traction, or the other side is, when you're researching this and trying to build out the business case, and early on, you should be building out a business case for whether you should even do this. Look, if you're going to get into a startup, it is a 3-year brutal commitment. Should you even do it is the thing that you should be asking yourself constantly, for at least the first few months, and, until you've proven it out. And you can go on Google and, except in a couple of cases here where folks are trying to do stuff really at the cutting edge. If you're in any kind of established industry, with products or services that are established, and you're coming at it maybe in a unique way or otherwise, you should be able to Google, what is the average, dollar per product, dollar per order, a little bit difficult, but dollar per customer lifetime value. But Google these things and try to figure out, if you think that you're so unique that, there's nobody else like you, you're raising a big red flag for investors to begin with, because ultimately investors this is what I have to do. If I want to invest in somebody, I have to try to go through this and try to figure out what are these potential numbers going to be, and is there a large enough market here that this can scale over time to be worth that investment, let alone to give me a good ROI. So Google a lot of these kind of things. If you're in any kind of an existing industry, if you're in a net new industry, you're going to have to model this out and try to have good assumptions under this, that it makes sense, that these numbers that you come up with, actually, yeah, the assumptions are reasonable. What is it going, how much is somebody going to, spend per order? What is the percentage commission that you could get on this? What are the multiples? What are, the recurring client revenue? Is it a one-off? Is it a subscription that goes on? How, what's the client churn potentially? These are all the type of things that you need to try to figure out. And the more you can figure it out, the more realistic your projections are going to be, the better, honestly, the better your business decisions are going to be, because you're going to realize what's important and how to optimize those metrics. And the more you're going to be able to convince startups. One of the big things I see often is startups come up with this high level vision, but they have no way to actually measure, monitor, or manage this. So I'm like, well, how are you going to know if you're moving forward? How are you going to know if this is successful? So these are the things that I, usually tell people: go out there, try to find this type of stuff. Again, if you're early stage, you may have to just prove that you've hit certain, kind of benchmarks that, it took you 3 months to test this out fully, and these are the responses from your customer test. Then you've gone into early signups, and you've gotten this many signups for whatever the solution is, and you've gotten this many hard commitments. People have put a credit card behind it. Maybe you've done an MVP on a crowdsourcing platform, and you've got a bunch of folks that have signed up for that. Maybe you've actually got some initial pilot sales. If you're in B2B and it's a $100,000 plus a year solution, paid pilots, that is a big KPI. Having one of those, honestly, is something that investors will look at. If you got two big companies that have paid for a pilot of your solution, they're going to take that very seriously. Two paid customers on a low-cost consumer item, yeah, that's just not going to fly as much. So depending on what market you're in, there's going to be different bars and different expectations for what you need to prove to show that this actually is got something to it. But the closer you can get to monetization, the better. And so I tell startups, that whenever you have an idea, get to monetization as quickly as possible. First, because it will save you a lot of time. If you can't get to monetization quickly, you may just fatigue out, or you probably will run out of money, especially in a conservative market. So give yourself 3 months to figure out, get some money in the door. And that's a real hard bar for some of these things, but it forces you to really focus on what is, kind of crucial for the business, which is actually generating revenue. If your monetization approach is attracting a lot of users that you will then monetize with other companies, great. You're going to need some kind of letter of intent, from these companies saying, yes, we will advertise with you, if you hit these goals, and then you have to hit those goals relatively quickly, especially right now, especially, with some of the markets that it is a little bit more conservative than it's been in the past. This actually, I think the presentation will be available, so I'll let people go into the details around this one. This is another kind of model which is nice for early stage startups, to look at. And this basically is, about kind of your customer funnel. How are you going to acquire customers, and what are the metrics that you're going to use to show that your customer acquisition strategies and tactics are working? Those are great. If you can say, hey, over a 3-month period, we increased, customer views in our Facebook group by 10x. We increased, conversations by 3x, and we increased, conversion to our website where they clicked on a link by 1.5x, whatever that is. You need to kind of figure out what those are. How quickly can you get customers involved? Engaged is often the word I use. Engagement is a clear part of the customer journey. You can find metrics around that. They're going to be individual depending on your industry and what you're doing, but figure out, how do you know when a customer is engaged? And how do you know if they're more engaged? And how do you know if they're engaged enough that you can now try to actually sell them something? Those are individual steps in the customer journey. You should be able to figure that out. You should be able to measure that. Once you can measure it, then not only do you optimize your business strategy, but now you also have something that you can prove to potential investors as well. So it really, when we talk about these metrics, it's win-win. If you can figure out how to measure and monitor your business, you're going to optimize it, and you're going to have what you need to convince others that this is good. Churn rates are really big typically in business, understanding what they are, understanding how to reduce them. I've got probably 10 different, churn metrics that I can look at for more established companies. Very early on, you're going to struggle, to get a few, but you need to understand what those are. What is it that you can do to reduce those? It might be that if you respond to customers within 1 hour of their request, churn rates go down. So then one of your KPIs is, 1 hour customer response rates. And, that you're able to increase that over time, means that you can reducing churn. All of those are great ways to monitor your business and to optimize it, as well as to prove others that you know what you're doing. Customer referrals, promotion, NPS, all of this thing plays in some cases, your business will come from referrals. Other cases, not so much. You need to understand for your particular business, your business model, how is that going to work? And let's see. How are you going to be able to optimize that? And then ultimately, you should have some revenue metrics. But even early on, if you have a website, if you're on a Facebook group, however you're starting early on, you should be able to start tracking, how many people are coming here, how many people are engaging, how long are they staying, how often are they coming, are they, getting involved in discussions, are they taking the next steps in, that customer journey. There are a lot of things there that, you can actually start to say, hey, I'm going to track this, turn this into a metric. And when you do it, then you're going to go, well, how can I improve this? And you're going to get better strategies and your numbers are going to improve. That kind of stuff is golden. If you can understand the customer journey to that level of detail, that in and of itself will impress a lot of investors. My experience with startups is they often don't understand their customers at all. They cannot tell me about their customers in depth, let alone what it takes for their customers to spend money, where they engage, where they're going to find them, how they're going to convert them, et cetera, et cetera. So just even doing this, I think, has a lot of value. This is another way of kind of quantifying all of this, kind of acquisition to revenue stage. Numbers are going to be different. KPIs are going to be different. Try to figure out what works for your business. If you don't know, go talk to established companies in the business. If you're an investor and you're looking at a potential startup that you go, wow, man, this one is really interesting for me, but I have no idea, whether they're doing the right thing or not. Go talk to 3 other companies in the space. Go, how do you measure success? What does it take every step of the way? Try to understand those KPIs, and then throw those KPIs at the startup. Say, hey guys, tell me what you're doing around here. Can you quantify this? If you can't quantify it, can you qualify, how well you're doing, and what is it specifically that you're doing to optimize this? I think, as an investor, you'll actually gain a lot of insight if you do things like that. Let's see, where are we going now? We've added a lot of slides here. With modeling, there's 2 approaches. The top down is what's typical. Somebody will say that, the market size for logistics solutions is, $20 billion a year. our, total addressable market is this, or, our service addressable market is this, and we think we can do this, and yes, okay, maybe that's, it's good to show that, if you capture, for instance, 1% of the market, that you could be a unicorn. And usually what I tell startups is you need to try to figure out a way to scale this business to, $100 million, if not more, because otherwise anything less than that, most investors are just not going to be interested, because, the ROI, that we need to get, because we're sitting on this investment for so many years, is pretty sizable. So, if it's only going to get to 1 million, 5 million, 10 million, forget it. Just, walk away. If you can figure out a way to get a company to 100 million, it starts to get interesting, to 500 million, to 1 billion. At that point, now, yeah, that is going to garner a lot more interest. You can do that with top down, but then you need to figure out bottoms up. So let's just say ultimately you go, you know what, we're going to be a unicorn. We've got a SaaS company. We're looking at a 5x multiple. So we're seeing a $1 billion valuation potential. That means we need to hit 200 million in ARR, annual recurring revenue. We have, a typical client spend of, $100,000 a year. Ergo, we need to have, what is that, 2,000 clients? I'm trying to do the math in my head on the fly. That's probably the wrong math. And, this is, the average value per year. This is the number of clients, and this is how we're going to do it. And so now you're starting to go from that top-down number that people go, yeah, okay, yeah, magic wand here, to, wait a minute, no, these are reasonable numbers. Yes, I could see how over a period of 5 to 10 years, they would be able to get that many customers following these strategies, that the customers would pay, this amount, that their margins would improve over time. So you need to kind of have both to be realistic. If all you're going to do is give, the total market, TAM, SAM, or whatever, at that point, the investor goes, yeah, but is it realistic that these guys can get there? How are they planning to do this? How are they going to scale? So usually, when I'm creating, I call it a money slide, which is the first slide I put into a deck. I basically, force startups to come up with how that number is reasonable. And I have them go all the way down to, basically how many customers at what dollar, how are they going to get them, how are they going to retain them, et cetera, such that in one, kind of precise model, you go, yeah, this makes sense. I could see how these numbers connect. And so, that's a big thing is, as investors, we're going, yeah, they've got a few KPIs here and an idea. What are those numbers? And that's kind of what we've been struggling with. Just how do you quantify this? But then even if you have those numbers, how the heck is that actually going to scale and get to something that's large enough that has a potential ROI? That's a tough thing to do. So, whether if you're on the VC side, you're probably used to this. You're probably, going to run a number of different scenario models to figure out, if, this many customer additions per year, at this dollar, where are these guys going to be in 3, 5, 10 year? If this, then that. But the startups, if you want to really prove things out, you need to do a bit of this as well. Okay. First time I'm seeing the slides, guys. So I threw these at Astrid and she created some visuals. So this is nice. One of the other things that I often see with startups is unrealistic expectations. If somebody says, you know what, we can be a unicorn if we get 1% of the market. That's much more interesting than if they say, we can be a unicorn if we get 20% of the market. Getting a large percentage of any market is very, very difficult, and it tends to take time. If it's a net new market, you're establishing, it's a different thing. But still, I try to caution startups to be relatively conservative with the actual market share that they're going to need to get make this happen. If you're looking at too large of a market share for this to be interesting to investors, your niche may be too small. It's pretty rare that I have a startup that's too niche focused, but I've had it happen a couple of times, where honestly that whole market was, maybe it was $100 million market, and they're talking about trying to get 50%. I'm like, the market's too small. The amount of market share you're trying to get is way too large. Rethink this one. This is not going to give me any kind of ROI as an investor, because no matter what, if you're investing $100,000 into this company, and maybe if they're lucky, they're going to get to 5 million, maybe 10. Are you really going to get your ROI from that? So probably not. So have reasonable market estimates. These are just some different metrics that you can use. Engagement metrics are really good early on, daily average users, monthly average users, recurring users. What are they doing on the site? How long are they spending on the site? Are they making referrals? Are they contributing? Whatever you can measure, try to measure it. And then once you actually get money in, then there's a huge amount of metrics. Most of these are pretty easy to find and show. This is a list for SaaS specific companies. A lot of this is going to be later on. So as you're, now, honestly, you're probably, by the time you could get all of this kind of stuff, you're probably getting close to Series A to really be able to quantify a lot of this type of stuff. But it's good to know where these things end up. So then the earlier you can start looking at these metrics and figuring out how to track them and start tracking them, the better. If I can see somebody's been tracking some of these hard metrics over a few years, that tells me a lot. That tells me that they just know how to manage their business, because they're measuring what matters, and they've been doing it for a while. Again, different levels of, maturity with a startup, trying to figure out, whether something is worth it, how well are you able to get users to be active, however you want to measure that, how you engage, how well you can retain them. And then once you've retained them, are they sticking? How much are they using? How much more are they spending year over year? Again, there's a lot of different ways to measure this. Let's see. I'm not sure if we have extra. Okay, so there's a few extra slides. Let me stop here because I think I'm kind of running. We've got what, 10 minutes left?
Yeah, that's right.
Yeah.
You don't have to go over extra. Yeah.
Okay, got it. We've covered a lot of ground. I actually wanted to do a little bit of hands-on. That's not going to be possible, just given the amount of content we tried to cover. But let me stop sharing here, and then maybe we can just open things up for some Q&A for the last 10 or so minutes. Did I lose everybody?
It was really good. Just a volume of information that I need to process and chew down a little bit. I took a bunch of screenshots.
All right, good. Yeah, I think Astrid, these slides will be available for people in the.
Yes, of course. I'll make a follow-up email to everyone that attended.
And
Awesome.
the call recording as well, or?
Yes, of course.
Okay. All right. Yeah, I apologize. I forewarned folks, record my calls because I tend to be a bit of a fire hose.
This is great. This is really amazing information. We're currently at, I guess, not customer validation, but more of like scaling our, finally, what you said in the beginning of the meeting, where you need to make sure not to build just an audience and then you're going to monetize it, but it's straight away, like have the problem and then have at least either individuals who have similar problems and then creating a product, and then while you're creating your audience, you can also monetize on that. So we're in that stage, and this information was just spot on. right on time.
Good.
Thank you.
I'm glad. Yeah, it's tough. Again, I've been through the startup journey myself. I work with a lot of startups, and it seems weird to try to measure things early on, but it's the basic business. If you can't measure it, you can't monitor it, you can't manage it, you can't optimize it, and so whatever you can, try to figure out a way to measure it.
Yep. This is gold. This is really good. Thank you, Richard. Really appreciate it.
Yeah, sure. What about others? Other questions or?
Yes, Richard, I'm sorry, but I'm here in the middle of the road listening to this event. Just arrived now. I wanted just for you to clarify in terms of information and in financial modeling, what is the big difference from the early stage, I would say, C to Series A?
So typical seed by seed stage, normally you should have some actual traction. So you should, it depends, normally you're going to see some kind of level of clients and revenue and recurring metrics. So a lot of the basic metrics that you would track, for a Series A, you should see in a seed round as well. It depends, again, what you want to call a seed, stage of the startup, et cetera, et cetera. But normally you should start to see some of those metrics. If anything, by a seed stage, I would not even consider a company ready for seed stage unless they have a lot of good client or / customer metrics, that they are really tracking their customers. They know what it takes to convert these customers. They're looking at all of these different steps in the customer journey and being able to track that accordingly. So even if they're not strong revenue, they have strong customer engagement, and they can prove it with lots of different metrics. And they know the levers that move customers ahead. They know how their business succeeds. Did that answer the question?
Yes, thank you. Thank you so much.
Okay.
Yes.
And again, honestly, guys, you ask 10 different people that question, you'll get 10 different answers. Everybody kind of looks at this a little bit differently. So it's a mixture of art and science, and what is of value to you. If you're an investor, it's your own investment thesis. You're going to have your own metrics for your investment thesis. For instance, if it's impact, how much of a 10. That might be a real metric that you have that nobody else would have, and others may not agree with. So. Other questions, folks? I see Trant.
Hey, Richard. So I have a question about managing optimistic founders. So I often find myself involved in startups in a sort of operations standpoint, technology and operations. So helping people who have this brilliant idea, I will help them build a system, and I'll help them set up, think through financial models and those sorts of things. But I'm very rarely the person who's, the most enthusiastic about the idea, because basically I'm a cynic, I'm an engineer. I look for problems and I will poke holes in things, and then I'll work out how to fill them, as opposed to being the person who goes out and says, "Oh my God, this is so amazing." Those people are very difficult to deal with, because it's very often hard to ground them, to get them to say, okay, I get that your idea is great. How do we come up with a model? And then how do you, if the thing that they're excited about is, sometimes if someone has they're excited about something that's just wildly off the mark, it's not going to go anywhere, and you know that up front, and you can just walk away. And other times it's like they're wildly excited about something that's not quite on the mark, and you need to walk them through a process to get to a point that they're willing to pivot slightly to focus on the right thing. So do you have any suggestions on how you manage that ego / enthusiasm /
this was a discussion I literally had with a coach the other day, because that's what she does is coach these early stage entrepreneurs. So the first thing is, you want them to have enthusiasm. Honestly, that energy is crucial, because this is like a 3-year ultra marathon where you're getting shots. So if they don't have that, forget it. But then
it's about how do you channel the enthusiasm, right? You need the enthusiasm. How do you channel it in a productive direction?
Right. So typically, again, the process is to help show them what their business needs to succeed. So you basically take that customer journey construct and you just pound it onto them until they understand that, wow, okay, I've got to move all the people here for this to succeed. And these are the things we're measuring, and this is how to optimize this. If you can do that, and I've had to do that, with executives before, you're actually giving them the keys to succeed. Because the one thing that high energy and enthusiasm will do is they'll go out and they'll push on each one of those points to optimize it and get it done. But you have to bring them down to a level where they understand that this is what moves your business ahead. Don't get them down into the gears, all the specifics. That is not where most CEOs work well, but they need to understand the specific levers that are going to help them drive their business forward, what's needed for that, how to measure it, and then they should manage to that. If you can't get them to that level and they're too high in the sky, my experience is it's like a car spinning its wheels up in the air. It's going nowhere. You have to get those wheels on the ground, and the wheels on the ground for me is that they are dedicated to moving the business ahead at key points, and they're actually able to do it. Does that help?
Yeah, that helps a bit. I'll probably reach out to you about this afterwards, because this is one of those, the sort of coaching enthusiastic people towards success is a thing that I find myself involved in a lot. So anyway, thank you.
Yeah. 50 again. 50 is going to be just walk away from them. They're the dreamers. They haven't sweated this out enough, and it's just not going to be worth it. The other 50 is really about the how to get the rubber on the road.
One thought actually was is sometimes people need to have a sharp shock to stop and take things seriously. So have you had any experience with sort of getting founders who are a little bit too enthusiastic in front of investors so that they can fail fast and learn, oh, maybe I do need this data, that kind of thing. So get them in front of someone who's going to ask them hard questions and force them.
Oh yeah, I'm brutal. If I don't scare the crap out of them, then I'll put them in front of potential customers that will make them feel inadequate, or investors. I'll do whatever it takes for them to get realistic about their business, because it's only when they're realistic that they're going to move ahead. So I'm notorious for telling people their babies are ugly. I love babies. I would never say an actual baby is ugly, but in terms of startups, I will rip them to shreds. And if they're not listening, they're not making the changes, we're just done. Because I've had those and my wife will tell me, they're not listening to you. Okay, we're done. It's not, don't spend time. So, cool. Couple minutes left. Any other last questions? Speak now.
Edgar, I see your hand is up. Do you want to go? Yes.
Very good. Yeah, thank you very much for the presentation. Do you have any specific metrics for investment crowdfunding platforms? Which metrics should startups share in the crowdfunding platforms? Because when we research our what's in the market, it's mainly marketing materials, not more.
So crowdfunding is an interesting approach to do it. I'll give you some shortcuts. The first is reach out to LaunchBoom and talk to those folks. They will help you prepare your crowdfunding campaign. The second is don't expect the crowdfunding platform to bring you everybody. You actually need to do a lot of marketing on your own, social media marketing, build out your email list beforehand, get people really excited such that when you go live on the crowdfunding platform, all your people go, yes, they throw money at it. Suddenly you're the number one funded startup there, at which point the platform itself will start publicizing you. And then that's when you start getting oversubscription and other things. So I would say first and foremost, follow a smart strategy that way. What the KPIs are, again, you're trying to impress people. You're trying to get them on board. You're trying to get them to believe in you. They're going to be specific to you, where you're at, what is important to these investors. I would talk to 20, 30 people, find people that would be interested in investing, say, what's important to you? What do you want to see? And then use that as kind of the guide to what metrics you put out there. It's very, very specific for where you're at, the people you're speaking to, all of that. But that's the general guideline there.
Thank you.
That help? Sorry. People are asking me these big questions that would take 2 hours, honestly. So that's I feel bad.
Well, everyone has Richard's LinkedIn link in the chat. We are slightly over time going, but we have Josep Gray. You say that you have a question. Is it something that you'd like to address right away, or should we end it here? If you have something burning that you need to ask right now, please go for it. Okay, so he put in the chat. Richard, do you have access to the chat? Could you read it out loud?
Yeah, let's see. What does it say? I'm involved in an escape room project, and it will be in a secret location, early marketing campaign I suggested, which will heavily rely on word of mouth. We know one of our main KPIs is how immersive we make the event. Do you have a suggestion for other KPIs? Again, escape rooms are an established market. So I would look at other companies that are in this space, figure out how are they measuring and monitoring and managing their business, and probably use some of the same KPIs as an investor. That's what I'm going to wind up doing as well. How immersive it is. That's going to be pretty subjective. Again, it's an established market, so I think you need to use established KPIs and figure out how you're going to deliver on that. That's the short answer there.
Thank you so much, Richard. I hope that was helpful. Josep, you say that you can't turn on your audio. Thanks a lot. Thank you so much, everybody, for being here. And huge thanks, Richard. That was excellent. So many details, and you covered pretty much everything. Really appreciate your time here today. Everyone else, thanks for joining here. We have further on events. If you have found this, then you know how to find the other ones. We hope to see you in, next week and the week after in other events. Thanks for being here. Let us know, reach out to Richard or myself if you have any questions, or if we can help you in any other way. Thank you, and we'll stop here.
Great.
Thank you, Richard. Thank you for hosting. Appreciate it.
Thanks, Astrid.
Thank you.
Take care. Bye now.
Thanks. Goodbye.